What's up, guys, and welcome to another episode on Keeping It Real with Credit. My name is Ray, and today we're going to be talking about purchasing your first home, what the process is, how to get started, and how much money you really need to purchase your dream home right now. So some of us have an idea of what we want our dream home to look like, but what some of us don't know is how to get that process started. To talk a little bit more about that topic, I decided to visit a good friend of mine, fellow veteran, Mr. 22 himself.
You trusted me to defend your country, you can trust me with your finances. My name is Peter Mr. 22 Ripich. I am a combat veteran of Iraq and a U.S. Army officer. As a mortgage loan officer, not only am I committed to doing 22 push-ups a day to raise awareness about veteran suicide, I will also close your loan within 22 business days. As a way to give back to our veterans, I will donate part of my commission to the 22 Kill Foundation.
So when it comes to us buying our first home, some of us don't even know how to start. When it comes to websites, advertising, and billboards, it can be a little bit intimidating, but it doesn't have to be. So the question really stands: how do we get the loan process started, and what documentations do we need? So what documents will I have to provide when purchasing my first home?
Well, Ray, it's pretty simple. First thing we do is we send out an online application. The documents we need is last 2 years tax returns, last 2 months bank statements, and then W-2, their pay stubs. The reason we need this information is we want to take a look at their financial history. So what we like to do is we look at what's called DTI, debt to income ratio. So we want to see how much money they're making based on their bills, whether it's their Florida Power and Light, their electric bill, if they have a car payment, credit cards, student loans. So we take that all into consideration. We need to come up with a certain ratio. So we want to have that debt to income ratio lower so that their income is higher than their debt.
How long will the process take for the application?
Well, the application, the whole process to get closed, industry standards about 43 days. We actually can close a loan within 22 business days. So as long as we get all the documentation, we have a whole team in process. We send it to a process, it goes to an underwriter, final underwriting, and comes back. But we can do it within 22 business days. And the key there is communication with all partners involved, meaning the seller, the buyer, most importantly the buyer, that he gathers all the information, sends that to us in a timely manner, and we make sure we communicate with him as well as the real estate agent.
And in that process, what are some of the things that may delay the approval?
Well, usually everything is going along smoothly. If there's a major life adjustment, if the person loses a job, if they go and do a major purchase, we always tell them don't do any major purchases. Don't go out and buy a car when we're in the middle of doing this, right, because that's going to affect your debt to income ratio. So as long as that stays steady, we shouldn't have any delays.
So when it comes to buying my first home, I know credit score is a big factor, but how specifically does credit affect the application?
Exactly. Credit's very important. Credit's going to affect the interest rate. So what we want to do is every program has a certain standard, a certain credit score. So we'll call it just 600. We need to be right about 600 for certain programs. FHA has different guidelines, a conventional loan has different guidelines, and a VA for veterans has different guidelines based on credit score. The higher the credit score, the better, because what happens, the bank, the loan company looks at your credit and sees your history of paying back, whether that's a credit card, your car payment, or if you've had a home previously. So the higher the credit score, the lower your interest rate will be.
And now, how much money should I be making? How will I know how much home can I afford?
Yeah, it really varies depending on region, but what we do in our industry is we usually say about 3 times your annual salary. So for instance, somebody making $50,000, 3 times that, they're looking to purchase about a $150,000 home. Obviously, somebody making $100,000 could afford a $300,000 home. It just depends, but that's a good rule of thumb that we use.
Now, are there any benefits or discounts to being a first-time home buyer or military veteran?
Yeah, there sure is. We have a couple programs going on right now. There's one called a grant or a home assistance program. That's actually in the state of Florida, and I know all states have that, where they'll actually, a first-time home buyer can take an education course, and depending on the state you live in, you will receive a grant to help you with the down payment. So you don't have to pay that money back. We at Cross Country Mortgage, we have a program right now, 1% down, where we pay the difference on the rest of the down payment. So the buyer only has to come with 1% down. So for example, somebody buying a $250,000 home only has to put up $2,500. A veteran, they have the best thing. They've earned these rights, and as a veteran, they go zero down. So they come up to the table with zero money out of pocket to purchase their home. And they also have another advantage. They do not have to pay what we call PMI or mortgage insurance. So
nice.
That'll save a veteran anywhere from $200, $300, $400. And I work with a lot of veterans, being a veteran myself.
So now that we know what documents to submit to your mortgage loan officer, let's talk money. Like, what's the down payment? What's the monthly payment? And to what interest rate? What's the minimum down payment that I would need to buy a home?
Okay, Ray, it all depends. You know, I specialize in residential loans. So that's when somebody's buying a home. So there's three different types. There's what's called conventional loan. There's an FHA, which is guaranteed by the government, backed by the government, Fannie Mae or Freddie Mac. And then you have a VA loan. So each one has a different down payment. Conventional loan, normally 5% down.
Okay.
And that's when you're buying a bigger home. There's also what we call jumbo loans. But conventional loan, for simplicity, we'll say that's 5% down. An FHA loan is going to be 3.5% down. You have to come to table with 3.5. A VA loan, the best thing out there for a veteran, 0% down payment.
And what would the monthly mortgage payment be?
Well, again, that depends. There's a lot of factors in there. Depending if you're buying a single family home or a condo, a lot of times there's what's called an HOA fee. So what we do is we take the actual loan amount based on the interest rate. Interest rates now are about 4%. That's going to be steady, but you also have to add in a homeowners association. For a condo down here in Miami, that can be several $100s all the way up. Some of the neighborhoods for a single family home have what we call HOA dues, monthly dues. That's included in the mortgage payment. That can be, $200, $300 a month, as well as you need to include your insurance. So that's going to vary depending on the type of the loan.
And will the monthly payments be fixed or an ARM?
Right. There's two different types. There's a fixed loan and there's a ARM, or what we call an ARM, an adjustable rate mortgage. Those adjustable rate mortgages were very popular years ago when rates were a little higher. So what would happen is now people get maybe a 5-year. They'll be fixed for 5 years, and then after the 5th year, going into their 6th year, that rate is going to adjust based on what the current rate is. Right now, interest rates are at all-time lows. They're starting to creep back up now. So most people are going with a fixed. You can get a fixed rate right now for about 4%. The reason you're going to stick with a fixed versus an ARM is the U.S. Feds have raised rates twice this year, and they plan on raising it probably one more time, maybe in September for 2017. They've already said they're going to raise rates 3 times in 2018. Whoa. So what that does is that's the U.S. Feds fund rate. And what happens there is that rate goes up, that's what's charged to the banks to lend out money. So in essence, the bottom line is as that rates go up, other rates are going to go up. So if your credit card rates are probably going to go up, you're buying a car rate, interest rate will go a little higher. And then of course, mortgage rates will go up. So right now they're at 4%. As the Fed fund rates increase, mortgage rates will increase as well.
And how about the interest rate? What would be the interest rate?
Again, that depends on the credit and your other factors that we look at. But right now, we're looking about 4% interest rate.
So now that we know what we can or cannot afford, how do we seal the deal? Are there any other fees like mortgage insurance, closing costs? Well, let's find out what the finalization process really is. So what are the closing costs?
Well, closing costs vary. There's a lot of moving parts in there. And what I mean by that, Ray, is look, you have title, you have appraisal, you have survey, you have termite inspection. There's some other fees. So that's one thing. People have to put a down payment. They also have to pay closing costs. So closing costs can vary. I say sometimes it's about 4% of the overall loan. That's a rough estimate. We have a program here that we do. It's called the Hometown Heroes. So when we work with doctors, firemen, policemen, teachers, nurses, veterans, I'm connected with everybody in the industry, and we'll give a discount on the appraisal fee. We'll give a discount on the title fee. Nice. So we can save somebody, several $1,000s on the closing costs. but there are certain things that have to be in there. You have to pay taxes. There's a lien search. There's some items that we don't really have any room with, but some of the other fees, loan origination fees. Me personally, I don't charge a loan origination fee, so there's no added commissions or fees involved in that.
And now, will there be a prepayment penalty?
No, there's no prepayment penalty on the loan.
What kind of fees am I expected to pay?
Well, something they always ask about is mortgage insurance. Mortgage insurance, depending on the loan, on an FHA loan, that's automatic. You have to pay mortgage insurance. Depending on the conventional loan, how much money you put down will dictate whether you do that. A veteran does not pay mortgage insurance. That's one of the advantages for a veteran doing a VA loan. They do not pay that. So they can save anywhere from $200, $300, $400 a month on their payments. So that's a huge advantage they have. Mortgage insurance, though, as they develop, once they have 80% equity in their property, once that happens, they can go back to the lender and ask for that to be removed. It's automatically removed when they get down to 78%. So what I mean by that is actually 20% equity in the property. So once they've gotten there, it's automatically taken out.
Now, one question, and I'm pretty sure the other viewers have this question. There's a bunch of mortgage companies out there nationwide that can service anybody, but what makes you different?
Right. Well, you know, it always comes down to your individual loan officer. You know, it's not so much the company. Every company has different programs that they can use, some better than others, obviously. What differentiates me from my competition is, I don't know if you know this, Ray, but I used to be in the Army. I was a major in the Army. I was a combat veteran. I served there. You know, we have a certain creed we live by. You know, as an officer, when I give you my word is my bond. That's not just something I say. That's not a TV thing. That's something I live by. So I've done that for years. Honesty, integrity, ethics. Again, living by my word. So probably the biggest thing I can do is provide the service. If I tell you it's going to get done, it's going to get done. I'm going to do whatever it takes to make it happen. And I know that sounds cliche, but that's a motto that I've lived by almost my whole life. So the service. And what I try and do is to be successful is I make sure I communicate with all parties involved. To have a successful relationship, whether it's a business relationship, a significant other, boyfriend, girlfriend, husband, wife, I think communication is the key. So what I make sure is my whole team, that we're in constant communication, not only with each other, but with the real estate agent, with the buyer, keeping everybody involved and up to date in the process. Returning something as simple as returning phone calls and sending emails. I know a lot of people get tied up and get caught up and don't do that. So that's something that we strive for, and that's what separates me from the others.
Got it. So I know personally that you're famously known for Mr. 22. Tell us a little bit more about that is.
Well, Ray, I don't know about famously, but something I've taken on a personal challenge. There was a challenge going on last year, knock out 22 push-ups in 22 days to raise awareness for veteran suicide. 22 vets a day in this country are committing suicide due to post-traumatic stress disorder. So I've been doing that now. After 22 days, somebody challenged me, said, well, you could keep going. So I decided to keep going, and I think I'm on day about 397. But I've done it all over. I've done it at Disney World. I've done it at Washington, D.C., in front of the Capitol, Vietnam Wall. I've done it in China. I've done it on cruises, wherever I can. I try and have fun with it and to raise awareness. Day 365, I was up in Washington, D.C. I actually had the opportunity to go to Arlington National Cemetery and knock out 22 there to pay my respects to the veterans. So I'm going to continue doing that. And one way I want to give back is part of my commission, I'm going to donate to the 22 Kill Foundation, which raises awareness for veteran suicide.
So there you have it, guys. Owning your first home is really not that difficult. All you need is your financials and a few documents in line, and you'll be on your way.
Great. Not only am I committed to knocking out 22 push-ups a day to raise awareness to 22 veterans who commit suicide every day, I'm going to donate part of my commission to the cause.
Also, so there you have it, guys. Link is in the description below. If you need to contact him for your next home, make sure you do. Part of his commission will go to the 22 Kill Foundation. Don't forget to like, subscribe, and comment below. And here's to keeping it real.
All right, Ray, let's knock out 22 troops. Knock it out.
Okay.